Hello, and welcome to another Rottweiler Tax video. In this video, I'm going to give you the 3 common practices that real estate agents, brokers, and investors have that guarantee they will pay more in taxes every year. The first of these practices is one that you may already be familiar with. It's using a spreadsheet in place of an actual accounting system. So if you're keeping track of all of your income and expenses on an Excel or similar spreadsheet, there's a few problems with that. The biggest one is the likelihood of human error. When you use a system like QuickBooks, you have a way to reconcile the numbers on your bank statements with the numbers in your accounting. So we can make sure that everything matches up as the year goes on and reduce the likelihood of something being incorrect, if not eliminate that likelihood entirely. But when you use a spreadsheet, you are subjecting yourself to a very high risk of human error. Now, beyond that, of course, this also means that you're putting yourself at audit risk. So this is a twofold problem. Either A, you're missing deductions altogether, which is the more likely scenario, or worse yet, you're declaring deductions that you should not be declaring. There's really no easy way to verify the information in your spreadsheet without going back and looking at all the bank statements over again, and even then, once again, high probability of an error. Now, the second most common thing we see people doing is taking illegal deductions, and this is often without realizing it. The most common type of illegal deduction that people are taking is writing off loan payments. Now, when I say loan payments, I mean any type of loan. That can include credit cards, that can include auto loans, that can include your mortgages, that can include any type of loan. The actual payments to a loan are not posted as an expense on your P&L. So even people who are utilizing QuickBooks to track their income and expenses will oftentimes misclassify their loan payments as a deduction. You're not allowed to take that as a deduction. The problem with this, again, is you have incorrect information on your P&L. If you're putting on deductions you're not allowed to take, and at a later date you have to have that information reviewed by the IRS, then you're putting yourself in a position where you've written off things you can't write off. You might not have lost money right away when you filed your return, but it does end up coming back to bite you later. The third most common practice that causes real estate professionals to overpay on their taxes, whether it's now or later when their return gets reviewed, is actually their mindset. Now, you're probably wondering, what exactly do I mean by mindset? Well, let me ask you this. Do you think you're getting all of your write-offs? Do you? Are you sure? How often do you complete quarterly or monthly reports for certain types of expenses in your business? Because if all you're doing is writing off whatever you can put on your expense list, there's a very high likelihood that you are missing out on deductions. In fact, I can almost guarantee it. Now, in addition to that, do you have an S corporation? Or do you have some sort of business entity? And do you believe for sure that that is the correct structure for you, that it gives you the best deal when it comes to filing your taxes? If you have an LLC, that LLC can be taxed 4 different ways. When you set up your S corporation or whatever it is you happen to be using, did you run the numbers for all 4 of those possibilities and pin down which one comes out the best? If the answer is no, there is a very strong probability that even if you already have a business entity set up, and even if you think that it's helping you, there's a chance you're actually losing out on it, especially if you haven't changed anything since the tax cuts of 2018. Do you think that tax planning is as simple as a couple of write-offs, a business entity, and maybe a retirement account? Because if you think that, I want to be the one to let you know that there are many more tax incentives in our 70,000 page tax code that you could be taking advantage of. You have to be able to open your mind to the idea of maybe there's something else out there that my general practitioner accountant is not aware of and has not gone over with me. Many of you watching this are passing up on some of the best tax incentives for people in real estate because you have not worked with someone who has that specific skill set of working with people who are real estate professionals. As long as you believe that your tax bill can't get any better, it won't. One of the biggest goals we have when we work with our clients is to help them become just educated enough that they understand why we do the things that we do, and they feel confident and comfortable implementing the tax strategies we recommend because they know what they're doing is correct. If you want that for your life, click the link below this video and schedule a free strategy session to see if we can help you. I'll see you soon.